I think in the sense that of concrete outcome, this Governing Council meeting will probably be rather uneventful in the sense that they will probably not announce further measures today. But of course, the press conference might be very interesting because I think that Christine Lagarde will get some questions on what the Fed shift will mean for the ECB, what the rise in the euro, the appreciation in the euro will mean for the inflation target. So I think it's more about the longer term trajectory that we will need to look at in this meeting.
If you look at the speech by Philip Lane at Jackson Hole, I thought it was quite interesting that he talks about a two-stage approach. So the second stage clearly is more interesting. What do you think will they do?
I think that they will keep the door wide open for further measures. And if you just look at not just inflation expectations or five-year break-evens, but if you look at the survey-based inflation expectation, they're at their lowest point ever. On the record. If you look at inflation 2 years out, if you look at inflation expectations 5 years out on the professional forecaster survey, they are at the low point at 1.3%. So the ECB needs to be absolutely convincing and telling the market we are absolutely ready to do everything to stem deflationary pressures in the Eurozone. And I think this will be the biggest task for Mrs. Lagarde today.
It will be a task for today, but most likely also for the December meeting, because most analysts do expect that some upgrade, for example, with the APP. Do you expect that as well?
It is absolutely possible that we see some tweaks or even some major shifts in the PEP in the first place, and also in the purchasing programs altogether. As we know, the range of the PEP in its usage of the past average of the last couple of months would make it end by roughly mid-year 21. And if we expect that the economy will not have returned to its potential or to even pre-COVID growth, then we will probably need some longer-lasting stimulus. So I think, yes, December is a good point in time to look at further stimulus, and it will probably be rather on the quantitative side, rather on the price side. So more about the PEP rather than about interest rates.
And when we talk about the economic recovery, it seems that it's getting a bit more sluggish than we had anticipated back in June or July. What are your expectations for the remainder of the year for the Eurozone?
That's interesting because in the summer meeting, the ECB did nothing, and they were sort of almost complacent about the trend of the recovery. It looked like a perfect V at the point in time. Now we have seen some economic indicators softening, and it rather looks like a Nike swoosh. It rather looks like a much more shallow recovery at a later stage, and also throughout the remainder of this year. So I think also you could also hear that from the latest interventions by Philip Lane. So I think that the ECB itself is getting a bit more cautious. We will see that in the new staff projections out today. So I think that this is another reason why the ECB will stand ready to do everything it takes to really to underpin this recovery.